Hello everyone, welcome to my YouTube channel. In this particular video, we'll be solving one more section C problem on financing decision. The question is on the screen. Please take the screenshot of the question or at least pause the video and write down the question. The following data are available for X Limited. The selling price per unit is 120 rupees. So the selling price is 120 rupees. Variable cost per unit is 70 rupees. Variable cost per unit is 70 rupees. Next, I have given the further information, that is total fixed cost. Total fixed cost is 2 lakh rupees. So using this particular information, we have to calculate the operating leverages if it produces 8,000 units. The sold units is 8,000 rupees. Okay, when it sells 8,000 units, what will be the operating leverage? That is the first uh, item which you have to find out. The second thing, what will be the percentage change, okay, if output increases by 5%? So after that, they're increasing the output by 5%. Once they increase the output, what will be the profit then, and what will be the percentage change? That has to be calculated. So we have to have a 3 columns. So particulars 8,000 units and increase by 5%. That also we need to have. First, let us calculate for 8,000 units. We have sales. So total they are selling 8,000 units and per unit they are selling at 120 rupees. So it is 9,60,000. From that we have to reduce the variable cost. From that we have to reduce the variable cost. The variable cost is 8,000 units and per unit variable cost is 70 rupees. So it will be 8,000 into 70 per unit, which will give us the answer of 5,60,000, which will be the answer of 5,60,000. Next, if we minus those two, we will get contribution. 9,60,000 minus 5,60,000 will give us contribution. From that, we have to reduce fixed cost. Fixed cost in the question they have given it is 2 lakh rupees. Fixed cost is 2 lakh rupees. That 2 lakh rupees we have to minus. If we minus, we will get EBIT. EBIT or operating profit, we will be getting it, which is 2 lakh rupees. EBIT or operating profit, which is 2 lakh rupees. 4 lakh minus 2 lakh will be 2 lakh rupees. Now, in the question, if you observe B point, output is increased by 5%. So increase by 5%. Output they are increasing by 5%. When they have increased, so we have to add 5%. So 8,000 plus 5%. 8,000 plus 5% will be 8,400 units. Now again we have to calculate EBIT for that. So now 8,400 units into 120 per unit will be our sales. So our sales will be 10 lakh 8,000. Next, variable cost 70 per unit. So 8,400 units into 70 per unit will give us the answer of 5 lakh 88,000 units. So if you minus 5 lakh 88,000 from 10 lakh 8,000, we will get the answer of 4,20,000. From that fixed cost, we have to subtract. Fixed cost is 2 lakh rupees. When we subtract that, we will get 2,20,000 rupees. Now we have got both contribution as well as EBIT. With the help of this, we can calculate operating leverages. The formula to calculate operating leverages are EBIT contribution by EBIT. First, let us calculate for 8,000 units. So, in 8,000 units, the contribution is 4 lakh units and EBIT is 2 lakh unit, 2 lakh rupees, sorry. 4 lakh divided by 2 lakh. When you do 4 lakh divided by 2 lakh, we will get operating leverages, that is 2 times. Operating leverages are 2 times. The same type we will calculate for 8,400 units. For 8,400 units, the contribution is 4,20,000 and EBIT is 2,20,000. So 4,20,000 divided by 2,20,000 will give us the operating leverage, that is 1.91 times. 1.91 times. This is our operating leverages. So now, next let us find out the percentage change in EBIT. What is the percentage change in EBIT? So the formula is Differences in EBIT divided by base plan in EBIT. Differences in EBIT divided by base plan in EBIT is the formula into 100. So now see here 2 lakh is there and 2 lakh 20,000. So we have to take the difference. Adhe subtract ಮಾಡಬೇಕು. 2 lakh 20,000 minus 2 lakh divided by base plan. Base year yadu idu. 2 lakh is a base plan. 2 lakh. So divided by 2 lakh. So 2 lakh 20,000 divided by 2 lakh. 2 lakh 20,000 divided by sorry 2 lakh 20,000 minus 2 lakh will be 20,000. So that 20,000 I've written here. That has to be divided by 2 lakh rupees. So 20,000 divided by 2 lakh into 100 will be 10%. So percentage change in EBIT is 10%. This is how you need to solve the problem. Hope you have understood how to solve this problem. In my next video, I'll come back with some more problems on financing decision. Thank you for watching the video. I'll come back with the next video.